Hello, today is Monday. It is the 27th of August, 2012, and for the first time since early May, silver price is now above 31 as the breakout was last night. Still more of a little bit of a consolidation over the last couple of days more than anything. The Fibonacci retracement that I have on the screen is from this low and it's now whatever the high happens to be. Generally speaking, it seems as if these Fibonacci retracement marks magically line up within previous significant areas. So the first one is obviously in here, then the second one within this high. Therefore, if it was to move up just a little bit higher, what level would it take for this line here to match up more appropriately with the highs? And if that's the case, where would this line up? And the answer for that would be a top of around 3250. By no means I am saying that's where it is going to be going without any serious retracements, just that if that happens to be the top in here, that the first Fibonacci level would happen to meet up with this high and the second one within the upper range in here. Now, the other Fibonacci level that has some importance, we're going to take a look at this on the 30-hour time frame, which takes us to the February top and the 2613 low from early July. What we're seeing within this is, first of all, the next Fibonacci level is 3267. So 3250, 67 level, if that's the case, and those Fibonacci levels I brought up in the last part will work out very well. But with that being said, it's already had this breakout and a clear breakout pretty much up to the 50% Fibonacci retracement level, and the strength is 47.27, so pretty much a 50% retracement. Now, what is important on this? Are we going to have support at this level? Is this going to be a major pierce above? I don't think that will be the case, although it could. Or is it going to go straight up towards this level? To me, there is no way of finding out what is going to come into place. But if it does manage to go to the high 38s, really around 3165, 3170 or higher, then most likely it'll keep on having further momentum up to the 32 and a half, 32 and 2/3 level. When you break above here, then pretty much all that does, it tells us that this bear market momentum has been switched up to that of neutral, and then breaking and holding above this line means that the selling is a failed move and that you'd be in a full-pledged bull market. And then just looking at this 18 average, it's obviously had a nice breakout thus far above that level. Let's now take a look at this on the weekly time frame. As far as this average is concerned, a decent size break above this level when it was consolidating for the last two periods. Thus, the 18 average is now rising. What would be strong for this market is to be able to really hold above the 30 mark for the next couple of weeks and maybe make a move up towards this 33 and a half level, which is a large Fibonacci level from this point to this point as well. And consolidating through time, not so bad either. Finally, the more longer term chart, which is the quarterly time frame, obviously in that of a major uptrend, as the only times it's been below this 18 average of lows was the 2008 fall. The selling that has occurred through time duration has been much longer, as this is over a year and a half compared to about a half a year in 2008. But the duration of how far the selling occurred, obviously this one was more greater. There's no guarantee that we've hit our bottom and that it's going to keep going towards the upside, which is the key thing. If this 26 level doesn't hold, definitely a lot of reason for concern that it can have another 5-6 plunge lower. But again, if it can have this nice break above the 3840 level, then it should be really, really good to go for not only testing the previous 50 level, but taking that out. And thank you for tuning in to today's video. Take care.